Apes and apettes, welcome back to the channel. It looks like to me we could see a big green day tomorrow. Now, obviously, let me point out the obvious here. I am not a financial advisor. I am not a fortune teller. If I was, I will tell you the exact second the MOAS would start, but I cannot do that. All I can do is go over what I am seeing and why I am saying this here in this video, and that's what we are going to do. A lot of this is based off of the technical analysis, but as well as a lot of other key things. So if you guys get value out of this video, hit that like button for me, subscribe to the channel if you have not already, but most importantly, make sure you're not shorting the like button. Give it a tickle, tap, touch, or smash. Thank you guys for doing that, and let's get into the video. So first and foremost, I want to start off this video with saying this. None of this matters if Russia were to theoretically invade Ukraine. The markets would come down. AMC is not in its own bubble. It is still a part of the stock market, so it would likely come down. As long as we don't see any more escalation, then we could actually see room for a major rally. And something to keep in mind is how the markets are operating right now is they're selling off once news comes out. Whether, you know, most of the time it's bad news in this day and age, right? The markets sell off, then the next day they tend to rebound as long as the situation does not continue to develop and get worse. So if we don't get any new announcements, I don't think the market is going to continue to sell off. The markets are kind of reacting harshly to things, and then they're getting over them just as fast as they initially reacted to them. So as long as nothing happens, then we're really set for this green day tomorrow, and it could be a substantial green day. I don't want to come out here and say that we could see a mega bounce because I've called those out a lot in the past, and I don't know if that is going to be the case. It could happen on Friday, or it could even happen on Monday, believe it or not, but I do think you are in for another mega bounce like day here in the next couple of days. And exactly why that is, it really comes down to the technicals. If you know very little about technicals, you probably already know why I am going to say this, right? We were sitting at about $15 per share, up and down, you know, below 15, above 15, come back down again. And then we finally got those rallies, 10%, 15%. And then we did see that rip. I mean, this was like a 15% positive day. All the way to $21 per share is where we peaked out at, came right back down, ended up closing the day down 1.85%. Nevertheless, this was a lot of strength, and that is where it started, and that really gave us this range, because then we went up the next day 1.18%, and then we went down 5.64%, but we stayed above $17.75 per share, this blue line right here. The next day, we rebounded almost 10%, 9.75%. And then we had another strong day, up another 1% the day after that. And now we have come down 3.71%. But what you will notice, right, and we're on the daily candlestick chart. We're going to break this down to the 4-hour candlestick chart as well and talk about another couple things. But you can see the low for the day was 1850, this next blue line I have right here. And why is this so substantial? Well, we touched that right here, right? And we also closed above that right here, and we opened above that right here. So you see this clear level of support that is formed right here, and then we touched it today, and we came back up. As the markets were selling off throughout the end of the day, AMC actually started to rally. So if we pull this out to the 1-minute candlestick chart, you guys can see that AMC found a lot of strength out of nowhere, really the last hour of trading, right? Pull this up to the SPY, and the SPY did not. The SPY sold off into the close quite dramatically. And just to, you know, pull this back up again, it's the complete opposite chart. AMC went up, SPY went down. So even though all of these tensions, geopolitical, drama shows are going on around the world, Fed Bullard came out today and said they need to act super aggressive. They're way behind the curve, essentially. AMC didn't even care. AMC did not care whatsoever. We did see that pullback intraday. For a while, we were up a lot and actually hit $20.21 per share. And we'll talk about that in 1 second. Went down and then seen that strength at the end of the day. Now, $20 is going to be the key level. If we can break above 20 with some real strength, then I think we are set to fly. Even if you pull this up on the option chain, you can see that $20 is a very important level. You have 22,000 for open interest sitting at the $20 call for this Friday, for tomorrow. And as you guys will notice, the price of this is very low. And that's where the whole mega bounce situations start to present themselves and ultimately happen, right? If it's $16 for this contract, that means your break even if you bought this contract was $20.16 per share. And we know one contract, whether it's a call or a put, controls 100 shares. The market maker will have to hedge out, either buy the stock if you're talking about on the call side, or short the stock for the put side, right? So you guys are following me here. When these contracts are so cheap, when there's 1 day left to expiration or even on the same day, if AMC breaks above $20.16 per share, the market makers have to instantly hedge all of these contracts so they don't lose money. The market makers, they're not in this game to lose money, so they hedge out their positions. And when you see the amount of contracts that we are seeing right now, 22,536 at the $20 strike, that's a lot of buying power that would have to go into the stock immediately. That's 2.25 million shares that would have to be instantaneously bought at $20.16 per share. And if we take a look at the volume, right, we're not seeing high volume whatsoever. It's very, very low volume. And there's something I do want to point out on that front as well. But really, today we only seen 39 million shares that traded hands. Over the past week, it's sitting really in the low 40 million. So 2.25% on one expiration is obviously a lot. If you take into consideration what that market maker's buying power, what those shares, those 2.5 million shares, 2.25 million shares that would have to be bought, how high it would push the stock, you start to run through these expirations or these strikes really fast. And then you do see at the $20.50, $20.50, 5,500 for open interest, 12,500 at the 21, 3,600, 11,000, 3,000, 11,000. So it's very well possible you could run up to $25 per share. And yet again at $25, you see 16,000 for open interest. And these contracts are very, very cheap. So the hedging has to happen immediately. There's not much room between your strike in the break even for the market makers, and that's why you see these mega bounce like scenarios that do unfold. And when they happen, you're looking at about a 15 to 25% green day on those days. But like I was saying about the volume, it has been very, very low. No surprise about that. And if we take a look at this is AMC stock monthly trading volume. Back in June 2021, we were sitting at over 5 billion shares that traded hands in that month alone. Now what are we at? We are less than 1 billion shares. We are at like 600 million shares for the whole month of February that have traded hands, as well as in January. Not much better, right? Like 700 million shares that traded hands. So when you see this low volume and then you see a volume spike on any given day, that's where you can see big moves in the stock. And if we do take a look at the broad picture as far as the Stonko tracker data is concerned, 29,000 calls that are in the money, 292,000 calls that are out of the money. That is 29.2 million shares that would have to be bought by the market makers if all of these contracts ran into the money, which they're not all going to. But imagine if 50,000 contracts run into the money. That would be, let's take a look at it. Let's do some rough math here. If 50,000 calls ran into the money, that would be roughly going to about the $23 strike. Right, about that. So a decent move to the upside, not too crazy, but nevertheless, 50,000 contracts controls 5 million shares that would have to be bought. That is a substantial amount of buying power that would have to come on the open markets within the same day. So usually you see market makers hedging out contracts. The closer they get, the higher the price of the stock goes, the more hedging that happens, besides on these really Thursdays and Fridays when you do see those big moves. Now, all of this does come down to the global tensions, if that does escalate. If it does not, I definitely think we're breaking out of 21, and we could even go as high as $25 per share. That's really the next major resistance level we're going to have to break out above. That's where we first started to flush to the downside, right here after we thought we were going to get that inverse head and shoulders, which it was an inverse head and shoulders, but the manipulation that was going on at the time would simply not let us break out. No matter how many shares you bought, no matter how many shares we all bought on any given day, it just simply did nothing for the stock. You would see days, I forget exactly what day it was, but that Friday everybody bought stock. You've seen the babyest move up, and then it came straight back down. And why I say the manipulation, if you guys have not heard this, is pretty much going away. It's because of this probe on Morgan Stanley, Goldman, and other Wall Street firms. But it clearly says right here, some of the funds that receive subpoenas act as liquidity providers to Wall Street firms. Well, who's liquidity providers? 3 of them: Citadel Securities, 2 Goldman Sachs and Company, and 3 Virtue Americas. And about a week before this was known to the public, this probe, that's when AMC started to actually rally. No matter if it was a super red day, AMC tended to be up, right? So you're seeing our orders actually going to the lit exchanges more so than not, and you're seeing that reflected in the price action of the stock. So I think we do have a really good chance here to see a mega bounce tomorrow, a green day, a substantial green day for AMC stock. And the way that this is actually setting up, if you look at the 4-hour candlestick chart, it is very, very easy to see, right? This is the main line we had to stay above, 1850, touched that today, went back up, kind of in this supply zone, right? This demand zone. And now we're going to see that that big push to the upside. This is a perfect technical breakout like situation. We came down, tested that support, made our way back up. We did not hang out at that support or close under that support level. So you're obviously going to see a lot of demand at this range in between 18 and 1850, and that, in my opinion, is going to hold up the stock and give us that rally tomorrow. The options really are what makes the whole mega bounce theory or situation. I don't know what else to call it. I like to call it a mega bounce, call it whatever you guys want, but it's a big rally on Thursdays or Fridays. And I think that sets us up for it because of the amount of options, like I said, that are out of the money. You really don't have that much economic data as well that is coming out tomorrow that could substantially move the markets. You have existing home sales at 3 p.m. and then you also do have later in the day Fed Evans and Fed Waller speech at 3:15 p.m. and 3:45 p.m. and then you have Fed Williams at 4 p.m. But these are all more on the these Fed speakers and voters of the Fed are more on the dovish side. So if anything, it could help out the markets actually continue to go up. If Ukraine invades tonight, then kiss what I said goodbye. But if we don't see any escalations, that's where the situation is going to get really, really crazy. And we do know the cost to borrow max is at 2.32%, utilization at 100%. So hedge funds, or institutional investors for that matter, they are not selling their stock. They're not lending out their stock. They're holding on because they think the stock is going higher. Even for today, we've seen interesting flow sentiment by institutional investors, sitting at about 50% positive, right on 50%. So that, in my book, is really good. Over the past 3 months, I've been tracking this personally. I have not put this in every single video over the past 3 months, but you would see positive order values of 0 to 10% on any given day, and it flipped. It flipped a week before that probe went public. So in my personal opinion, hedge funds, institutional investors knew about this probe, knew about the manipulation that's been going on, and now they realize, hey, they're not manipulating the stock. The apes are going to take over and they are going to drive the stock up higher. So why not? Let's get in on this trade and ride it alongside the apes. And that's really my take on the whole situation. There's a lot of moving factors here, and hopefully I did a good job articulating why I do think we could see a very strong green day tomorrow. If not on Monday, that is also very possible, but you're not going to have to see that instant hedging on Monday, so I'm really inclined to make these claims for tomorrow. So that's basically the situation. Another side note that I do want to talk about is Adam Aron, the way he has been behaving. He says, well, would you look at this? Justice Department is pursuing wide-ranging investigation of short sellers. Federal prosecutors are investigating whether short sellers conspire to drive down stock prices. Wall Street Journal, February 16th, 2022. And he has been acting in a very positive manner towards AMC, calling out the short sellers, basically saying as much as he can about the manipulation that's going on behind the scenes of AMC stock without getting sued or possibly, being questioned about making false statements, right? He's been calling out the short sellers, and I think that is a great demeanor to have for Adam Aron, for the situation we are in, for the short squeeze, considering the manipulation is kind of going away and the business is getting a lot better. I think we are in for some great things here in the near term and mid-term future for AMC. So drop your opinions on this video down below in the comment section. Feel free to rip me apart if you don't believe anything I'm saying. If it does resonate with you, if it makes sense, or you just like the video, hit the like button for me. Leave your thoughts down below in the comment section. Subscribe to the channel as well. Don't short that as well. Don't short the subscribe button or the like button. Thank you guys for tuning in. If you guys want access to all of my trades in real time, join a great trading community. Link down below in the pinned comment to do so for that, as well as the links to get free stocks, aka get yourself some free money with Webull, Public, and Moomoo down below in the description. Thank you guys for watching, and I will see you in the next one.